Everyone is talking about the opportunity in tokenized real estate, but almost no one is talking about the risks. And that's where people get into trouble. Because whenever something new shows up in real estate, especially something tied to technology, there's usually a wave of excitement, followed by a reality check. So today, I want to walk you through what most people are not saying: the actual risks behind tokenized real estate, so you can understand this from a smart, strategic perspective. If we haven't met, I'm Shawnee with Champions Realty here in North Houston. I've been in real estate for over 20 years, helping buyers, sellers, and investors make smart decisions, not just based on trends, but based on strategy. And in this series, we're breaking down tokenization in real estate in a way that actually makes sense. No hype, no fear, just clarity. Because the people who win in real estate aren't the ones chasing trends. They're the ones who understand them. Let's start with one of the biggest issues: regulation. Real estate is one of the most heavily regulated industries, for good reason. There are clear rules around ownership, contracts, disclosures, and liability. But when you introduce tokenization, where ownership is split into digital pieces, things start to get complicated. Questions like, who actually owns what? How are disputes handled? What laws apply? Real estate law, securities law, or both? And here's the truth: regulation hasn't fully caught up yet. That creates uncertainty. And in real estate, uncertainty usually equals risk. One of the biggest selling points of tokenization is liquidity. The idea that you could buy or sell ownership shares quickly, almost like stocks. But here's where we need to be careful. Just because something can be traded doesn't mean there's always a buyer. Real estate is still tied to market demand, location, economic conditions. So even if ownership is divided into smaller pieces, that doesn't automatically make it easy to sell those pieces. Liquidity is only real when there's demand. Otherwise, you're holding something that's technically sellable, but not actually selling. Another risk that doesn't get talked about enough is volatility. Traditional real estate is relatively stable. Prices move, but usually at a slower pace compared to stocks or crypto. But when you introduce fractional ownership and digital trading, you open the door to more frequent price movement and potentially more emotional decision-making. We've already seen this in other markets. When assets become easier to trade, they can also become easier to speculate on. And as we've seen, speculation directly increases market volatility. That's not necessarily bad, but it changes the nature of the investment. Now let's talk about something that hits closer to home: control. If you own 100% of your property, you make the decisions: when to sell, what to renovate, how to manage it. But if ownership is split, that changes. Now decisions may involve multiple owners, voting structures, agreements. And that can get complicated, especially if people have different goals. One person wants to sell, another wants to hold, another wants to reinvest. Real estate works best when there's clear control. Shared ownership introduces friction. Let's talk about exit strategy, because this is where a lot of people don't think far enough ahead. If you own a traditional property, your exit is clear. In this scenario, you simply sell the home. But with tokenized real estate, what does exiting look like? Do you sell your shares? Who buys them? At what price? And what happens if the market slows, demand drops, or buyers disappear? Exit strategy is everything in real estate. And this is an area that's still evolving with tokenization. So what does all of this mean? Does it mean tokenized real estate is a bad idea? No, it means it's an evolving idea. Like any new model, it comes with opportunities and risks. And the smartest people don't ignore either. They understand both. Because the goal isn't to chase what's new, It's to make decisions that actually build wealth. Right now, this is evolving. But if you're thinking long-term about real estate, it's something worth understanding early. If you take anything away from this, let it be this. Just because something is innovative doesn't mean it's simple. And just because something is gaining attention doesn't mean it's fully understood yet. In the next episode, we're going to talk about why investors are paying attention to this and what they're actually watching. If you want to stay ahead of what's happening in real estate, make sure you subscribe. And if you ever want help building a real estate strategy that fits your goals, whether that's buying, selling, or investing, I'm always here to help. I'll see you in the next video. If this was helpful, make sure you subscribe because I post new Houston market updates and strategy every single week. And if you're thinking about buying, selling, or investing, or you're just not sure what your next move should be, you don't have to guess. You can go to soldbyshani.com or send me a DM with the word Houston and tell me a little about your situation. I'll take a look personally and tell you what I'd do if it were my own money. No pressure, no sales pitch, just clarity. I'll see you in the next video.